three things. Number one, U.S. dollar. Number two, Japan. And number three, Europe. The dollar, number one, I mean, last week finally it stabilized, I guess, instead of going down. And the week prior, don't forget, the dollar was down, and energy-related, oil-related stocks, et cetera, were up. But last week you had the bounce. So, again, we get the 0.1% move in the dollar, and then the 0.6% move this morning, which is a more important point, which is obviously wreaking some havoc on those who chased oil and or energy-oriented beta, because, again, the U.S. dollar has an extremely high correlation to those betas. If you look at oil versus the U.S. dollar, the correlation on a 180-day basis is minus 0.96. Get the dollar right, you get oil and energy trading right. Point number two, Japan. Japan, what is Japan like? Why did Japan hit a 15-year high? I'm talking about Japan in Weimar Republic terms. Again, Weimar Nikkei being up at a 15-year high. It likes a strong dollar because you get the down yen. Forget about what the Japanese corporates are saying. Forget about what the poor people in Japan have to say about this. It doesn't matter. 70% of Japanese corporates apparently are saying they don't want any more easing. I can't imagine why they'd say that after 18 years of being suffocated. But the reality is that the stock market does not care. The stock market trades versus the currency. So again, you get the dollar right, you get the yen right, and then you get the Weimar Nikkei right. Finally, Europe across the board, you have some party going on out there. Again, if you're not long Italy, obviously you should have been. 15.4% for the year-to-date for the Italian stock market. Who didn't nail that? DAX up 13.1% for the year-to-date. Spain up another 0.8% this morning. And the poor, actually I shouldn't say the poor Greeks. If you're long Greece, you're beating the S&P 500. It's up 3.5% for the year-to-date. Don't forget that nothing economically has changed. The deflationary data that continues to be reported across Europe continues to manifest. And again, the stock market is not the economy. So those are your top three things.